I think what we're seeing in the crypto market over the past few months means more than ever that the U.S., we need market structure, we need clarity, and we need to get this across the line this spring. We got a few recalcitrant actors who said, well, it'd be better to have no legislation than the legislation we don't want. And I think both on the banks, the other crypto firms are united against them. So we need to get this across the line. The U.S., under President Trump's leadership, the U.S. is becoming the crypto capital of the world with our best practices, best regulation. And for crypto to remain a viable digital asset and move forward, we need to get this Clarity Act done.
So you think it'll come back fairly soon then?
I'm optimistic, and there's bipartisan support here.
That was U.S. Treasury Secretary Scott Bessent with me on Sunday Morning Futures Sunday, optimistic that Congress will bring back the Clarity Act for markup soon. U.S. crypto and banking executives, including J.P. Morgan and Bank of America, met at the White House yesterday for a second time to discuss stablecoin legislation. Both sides failing to reach a compromise on the language in the Clarity Act, specifically regarding crypto firms' ability to pay rewards on stablecoins. Banks are worried that there's going to be a flight of capital out of their deposit accounts into platforms that are crypto platforms because they're paying rewards to those customers. Joining me now is the CEO of Mara. Fred Thiel is joining us, leading one of the country's top Bitcoin mining firms. Fred, it's great to have you.
Great to be here.
Thanks so much for being here. So what is your reaction to this upset for the banks are having over the crypto platform's ability to pay rewards?
I think it's the traditional story of you had traditional finance who's very focused on protecting their business. And then you have the other side of the business, which is the disruptors, which are the crypto companies who want to come in and bring stable coins. Digital currency has to come into play. The banks have to support it somehow, but the banks are very afraid of losing their deposits. And banks are paying 0.25%, 1%, where you could get 4 or 5% yield other places, whether that's with crypto or whether that's with bonds, et cetera. So I think this is a battle of territory.
It's a great point, and I feel like this has, sort of like more, pushed into a debate about bank margins. Okay, that's where we are. But I want to talk about your business because you just completed the 42-megawatt data center build in Nebraska. You've got mining all around the world. Talk to us about the business. You've got 16 facilities right now across the world?
Correct. We have 16 facilities on 4 continents, predominantly in the U.S., spanning from Texas to North Dakota, including large facilities in Nebraska. One of the interesting things in the marketplace today is in the U.S., there's a huge focus on converting Bitcoin mining facilities that have ample access to power and the right conditions for conversion to high-performance computing, HPC, so AI hyperscalers. Internationally, power companies are only just starting to look at Bitcoin mining as a tool to balance load. Countries like France, where there's a huge amount of excess energy, where they have a need to balance between nuclear and renewable, and in the Middle East, where they're building lots of energy. So we see our business transitioning in the U.S. more towards AI, HPC, and in the international markets continuing to build the Bitcoin mining.
I know that the international markets are a big opportunity for you. We're looking at Bitcoin prices right now. We're pretty much looking at a huge sell-off from the highs where Bitcoin was all the way up to $126,000. Any thoughts on what happened here and why prices have fallen the way they have? Are you expecting a bottoming anytime soon?
Well, I think we're hitting a temporary bottom, and we'll see how long it sticks and if it can build. Essentially, what I think we're going to see is, if you look at pricing, mostly in the evenings, East Coast time, you're seeing selling, which tends to mean it's happening in Asia, and you're still seeing a deleveraging of Bitcoin. There's a huge derivative market that is very liquid around Bitcoin, even bigger than the spot market. And what that does is when people lever up, sometimes with 100 to 1 times leverage, and you get price moves, you get massive liquidations. We're still seeing some of that ending out. At the same time, you had gold as a momentum play all of a sudden. Gold, which has been sleepy, turned into a Momo.
Yeah.
And away it went, silver followed it, and you had money go from crypto into gold. You'd had money already going from crypto into AI, and as AI lost a little bit of its luster, it moved back to gold again.
Yeah.
So I think you have this triangular drama going on right now, and eventually things will come back. I think, as the market stabilizes. But Bitcoin is very much driven by macro, it's driven by liquidity, and it's driven very much like the equities. It's a risk-on asset still.
Yeah, for sure. And we've been risk-on for a long time at this point. But gold, you're right, is up about 15%, by the way, year to date. Look, I know you're reporting earnings, you're reporting the fourth quarter numbers at the end of the month, so you'll be guarded here. But investors would like to see some clarity on the roadmap for HPC in the U.S. I understand the international markets is a huge growth story for the company, but what about the roadmap?
I think what I can say is that we're having lots of very interesting conversations, and we've waited purposefully to ensure that the people we're talking with and the opportunities are very solid, so there's very low risk of execution. And I think that'll become clear as we announce things in the near future. When
you look ahead to the coming, 3 years, let's call it, where does the growth come from when you look at the growth story at Mara?
I think you're going to see it in two places. One is AI, HPC. You're also going to see it in international, where we are expanding quite rapidly now in Saudi Arabia. We're also expanding in Europe. Again, two places where there's huge amounts of ample energy. Saudi Arabia, for example, they have built huge amounts of power in advance of trying to generate hydrogen, and the hydrogen market hasn't developed. And so you have all these stranded energy assets that essentially are idle because they don't have an offtake. And that means that energy companies are willing to do partnerships with Bitcoin miners, for example, where they can share in the profits, and you have a very low power cost. And at the end of the day, no matter what happens with the Bitcoin price, the people who are in the lowest quartile of cost in producing Bitcoin will always be able to operate profitably, and that's our focus.
Wow, and it's fascinating to me that we're sort of moving, when you see all this money moving into AI data centers, we're moving from a data center race to a power race.
Energy is the critical asset.
Yes.
We sit on 1.1 gigawatts of energized power today with control over about 1.8. We intend to continue expanding that very rapidly. We announced at the end of last year a deal that we are in the process of finalizing with MPLX around building up to 1.5 gigawatts of generation capacity in Texas directly on a gas pipeline, which will have a data center campus associated with it.
Amazing. Fred, it's a new world. We so appreciate you joining us this morning. Thank you.
Thank you.
All right, Fred Thiel joining us from Mara.